Hello and welcome, dear traders and investors. I'm going to present to you the daily market review prepared by experts and analysts of FX.co portal. Here we go. Today is February 17 and we're starting from pound-dollar pair with Jakub Novak as usual. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.2052 occurred when the MACD line was already far from zero, so the upside potential was limited. Sometime later, there was another test, but this time the market signal was to sell, and there was also no strong price decrease. The test of 1.2017 in the afternoon happened when the MACD line was far from zero as well, so the downward move was rather limited. UK's retail sales report is coming out this morning. Its rise will lead to an increase in demand for pound, which will certainly prompt an upward correction later in the week. But if the data disappoints, another fall is inevitable. In the afternoon, beside the speeches of FOMC members Michelle Bowman and Thomas Barkin, there is nothing that will help dollar, so expect an uptrend in GBP USD. The input price index and leading indicators are of no interest. So, for long positions, you can buy a pound when the quote reaches 1.1960. and take profit at the price of 1.2022. Growth will be possible and this will continue the correction. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Pound can be bought at 1.1930, but the MACD line should be in the oversold area, as only by that will the market reverse to 1.1960 and 1.2022. Sell pound when the quote reaches 1.1930 and take profit at the price of 1.1875. Pressure will return if economic data in the UK are weaker than expected. However, when selling, make sure that the MACD line is below zero or is starting to move down from it. Pound can also be sold at 1.1960, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.1930 and 1.1875. The next stage in our review is the next major. Sebastian Seliger describes how to trade euro-dollar pair. The euro-dollar pair has broken below the technical support seen at the level of 1.0656 and is heading lower. The market is in the progress of the A, B, C corrective cycle, and now the wave C is being developed. When the corrective cycle is done, the next target for bears is the technical support located at 1.0622. The momentum remains weak and negative, so all bounces are being used by bears to sell the euro for a better price. Please keep an eye on the level of 1.0787, because this is the key short-term technical resistance. How to cut short positions on BTC USD, Petar Yakimovic describes. BTC USD has been trading downside, as we expected, and Petar found the rejection for resistance zone at $25,000. due to the strong rejection in the background and the overbought condition on oscillators, Tether sees potential for the downside movement. Downside structural objective is set at 21,550. Stochastic oscillator is showing overbought condition and fresh bear cross, which is a sign that we might see downside rotation. Key resistance zone is set at $25,000. More and more from Petar. This time is trading plan for gold. Gold has been trading downside as we expected, and the gold has heading towards the second downside structural objective, 1831. Due to the strong downside pressure and the breakout of the bear flag pattern, Petar sees potential for the further drop towards lower references. Downside structural objectives are set at 1793 and 1738. Stochastic oscillator is showing fresh downside bear cross, which is a sign that sellers are in control. Key resistance is set at 1845. At the end of the roll, here is Larry Bailey forecast for USD GPY dollar yen pair. USD GPY broke through the resistance of the global price channel line at 133.77 on Wednesday, consolidated above this level, and then continued to rise during the Asian session today. Now it's heading towards the target level of 137.62. Thanks to the Marlin oscillator being in a positive area. There is also a small consolidation above the level of 133.77 on the 4-hour chart. The Marlin oscillator has released a little tension, seemingly ready for a more decisive rise. And since the pair broke through yesterday's high, it's likely that the quote will hit the target level of 137.62. That's all for today. See you next time. Good luck.